Hi, leading into 30 June still, a couple of weeks to go now, and today I'm just going to talk to you about prepaying certain deductible expenses. Now, if you have a rental property or a share portfolio and you have a loan against that asset, you will be incurring interest costs on the loan. Now, in some cases, these interest costs are able to be claimed as a tax deduction. For those of you needing to maximise your tax deductions in this financial year, due to perhaps higher than normal earnings, if you're lucky enough, consideration could be given to prepaying the interest repayments for the 2015 financial year before June 30 this year. Now, that would result in you being able to claim all of next year's interest costs in this year's tax return. That also can apply to other expenses such as professional membership fees, for example, or your income protection premiums. Before you consider that strategy, however, please remember that effective from 1 July this year, the Medicare Levy in Australia is going to increase from 1.5% to 2%. And this means that for some of you, depending on your expected income, maximising your tax deductions in the next financial year may actually be the more viable option, as opposed to bringing forward your deductions to the current year. But before you decide one way or the other, we certainly recommend you speak to your accountant in that regard. Tracy Ferguson, thanks for listening.